Hello and good day. This is the daily analysis of the S&P 500, Nasdaq, and Dow Jones indices for February 10th. The price on the 4-hour time frame of the S&P 500 index. As predicted, there was a bullish momentum which after a short-term bearish correction entered the fair value zone. The value was grabbed and ultimately accompanied by a bullish displacement that broke the break of structure level. This indicates confirmation of the continuation of the bullish trend in the market. It is predicted that as the day goes on, the price will manage to reach higher price levels. If it closes above the 7,025 level, it can continue its bullish trend. However, if it only collects the buy-side liquidity and closes again within that range, it would be considered a trading strategy known as rain soldier that can, in the current market price, may experience a temporary short-term downward pullback to revisit and touch significantly lower support levels. With the analysis of the 1-hour time frame for the S&P 500 symbol, you can see the price movement, which after a short correction entered the 1-hour unicorn zone and ultimately was accompanied by buying pressure. Currently, based on the CVD divergence indicator, a negative RD has been identified, and after that, the price has entered a consolidation phase, forming both buy-side and sell-side liquidity. Could it possibly move upward during the London session, collect the buy-side liquidity, and ultimately react to the 4-hour order block zone, which has been optimized to the 1-hour time frame, and then, if a market structure shift or change of character is identified as a signal, a bearish move would be considered and we could use this opportunity to enter a sell position. However, it is recommended to avoid taking trades against the market trend and only consider trades that are in line with the bullish trend as part of the strategy system. Overall, the market in S&P 500, Nasdaq, and Dow Jones is bullish, with the market momentum driven by the DXY index, which has experienced a bearish drop. A decrease in the DXY index price should lead to an increase in trading instruments. Additionally, the outlook for lower interest rates also confirms the continuation of the trend. There is a bullish trend in the market. By analyzing the RSI index, we can see the price movement, which confirms a bearish divergence. On the chart, we can see higher highs, but in the RSI index, lower highs are forming. This serves as another confirmation for a price reversal from a bullish to a bearish trend. By analyzing the 15-minute time frame of a symbol, S&P 500, using the ICT Killzones TF Lab indicator, we can identify the killzone areas and trading sessions, and we can see accurate price recognition. There has been an accumulation move. The London session has been accompanied by a manipulation move that is currently moving upward, and if liquidity is collected towards the buy side and enters the order block zone, provided a reversal is identified, an upward move, and a break of structure, we can use this opportunity to enter a sell position with a target of either 1-to-1 or 1-to-2 risk-reward ratio, and if the price moves downward during the London session and collects sell-side liquidity, in the CP zones or rejection block areas, we can look for a trading strategy to enter a buy position in the market, targeting the drawn liquidity level or the order block area. Also, if the price moves downward and forms a distinct technical lower sell side, rejection block area, after the structure breaks, we can enter a buy position as a second trading strategy. And if it collects sell-side liquidity again and then closes within the shadow area of the ERC candle, that can be considered as a rain soldier strategy, which is considered a confirmation for entering the trade. On the 4-hour time frame, the index is close. So we can see the price movement, which after a short-term consolidation moves toward the fair value gap area, with momentum. By analyzing the RSI indicator, we can see a clear weakness in the bullish trend, and the price is currently accumulating orders, which, if it enters the overbought zone, could signal a reversal. And the formation of a negative divergence can serve as a confirmation for entering a sell position and indicate a trend reversal in the market. It shows this with the analysis of the 1-hour time frame, which is close to 90. We see the CVD divergence signal, which has identified a negative RDA, and by analyzing the RSI indicator, we can also observe a negative wire in the indicator, which confirms the bearish trend of the price. If the price moves upward and if the total cash inflow stays on the buy side, it could enter a bearish phase and move into the rejection block area. If a lower sell forms and results from a structural change in the market, we can enter a buy position. Place the stop loss behind the swing, aiming for a 1-to-1 or 1-to-2 risk-reward target or the buy-side liquidity decoy points. However, if the price closes below the rejection block area, it could target lower levels. By analyzing the 15-minute time frame of a symbol close by, we can see the price movement, which during the London session is accompanied by an aggressive move to the upside, and it is anticipated that the buy-side liquidity will accumulate over the previous two sessions. And after that, if there is a rejection in that Asian session range, it could move downward with a sharp distribution move. However, if during the London session the price closes above the 25,450 level, it can continue its bullish trend and target higher price levels. On the 4-hour time frame, the Dow Jones index, my prediction was that the price, after a short-term correction, would reach its all-time high or the FWG zone, but upon entering the fair value area, around the 49,847 level, it was met with buying pressure, and after that it continued its bullish movement, which, with the analysis of the 1-hour time frame of the Dow Jones symbol, we can see the price movement, which after an accumulation move was accompanied by a mini pullback to the downside, and eventually, with a distribution move, it moved upward with the price in this bullish candle entering a consolidation phase, which could move upward and collect the liquidity on the buy side. If it re-enters a range zone, it indicates the end of the trend, an uptrend and the start of a downward correction in the market. However, if it manages to stabilize the price above the 54,400 and 55,000 levels, it can target higher price levels according to the 15-minute time frame analysis of the Dow Jones symbol. We see the formation of liquidity on both the sell side and the buy side, with the price currently attracting liquidity towards the buy side. If it moves downward, it can reach the BPR zones, 49,950. We should look for a trading strategy for a buy position, or if a lower sell forms in that rejection block area, a second strategy will be formed, and if a weakness in the trend is identified. With a pullback and a change in market structure, we can use this opportunity to enter a buy position. However, if it closes below the range with a pin bar candle at the 49,847 level, the price could target a lower level. In addition to this, traders who follow ICT and smart money concepts can also take advantage of the SMC TF Lab indicator to identify high importance areas such as order blocks, liquidity levels, and also FVG zones. As we can see, the price has reacted to the FVG zone, order block zones, and the important areas identified by the indicator. Wishing you success and profitable trades.